Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market update for this wild Thursday, January 25th, 2018, just after 4:40 p.m. So we still have our boards open. You can throw out these settlement prices in the gold and the silver market. That's not where they're going to be. They actually, at the end of the day, now this is the settlement, so I guess I'm saying that wrong. But the last trades were $20 lower in gold, silver 40 cents lower than this. So markets that close later, such as you get the settlements in the stock indices at about 315 on the futures, the currencies, number of them at 230, they're more realistic where the markets were. What took place is intraday, President Trump came out and he tried to clarify as best as he could what U.S. Treasury Secretary Mnuchin said yesterday about trade being boosted by a lower dollar. I mentioned it yesterday. Academics know you don't talk down currencies. As a Treasury Secretary, he did that in his own manner. I didn't say he was wrong yesterday either. I said it's what he thinks. I think that the market, seeing the president, said that, okay, he tried to clean it up. And that, of course, occurred after President of the European Central Bank, Draghi, made it clear that he doesn't want to see any currency wars. And he never did mention the Treasury Secretary. But it created wildness in the market. These numbers, you came off 100 points off the lows in the dollar index. The eurocurrency got to 125.76, closed at 124.28, 158 points. What did I tell everybody? If you get my newsletter, and to get that newsletter, by the way, here's my market research. Remember, I offer it free if you haven't tried it for 20 days. Otherwise, subscribe to it. It's really simple. But I give my best ideas on wisdom and ideas on trading in those. And one of the things that I preach is that you don't sit down and go through reports you don't have to go through. In other words, I consider a major report Davos when it's been, what, 17 years or so since one of our presidents went there. Now we have President Trump, who many think just speaks his mind at any point in time. What was he going to say? What is he going to say in the keynote speech tomorrow? How is it going to be taken? You never know. The first thing we saw is that Steve Mnuchin did one thing, the president did another, and if you think those aren't big moves in currencies, they're big moves in currencies. We're getting our first little break also, or pause might be the best word, on the energy sector as well. Bonds and notes really saw some action. Yeah, these numbers are wildness. We saw some big moves in a number of the different yields. But let's go to the charts and have them tell us what's going on, because they're clearing up behind me right now. Again, for the week, we're up another 30 points. It's a broken record. I feel so bad doing these charts sometimes because all I can say is the same thing over and over. Yes, we have a pause, but we've had pauses in these charts at different levels, and they've always, how do I say that? It's not the right word, always. They so often resolve after sideways action to higher highs. Until the pattern's broken, folks, it ain't broken. You do have a pattern of higher lows and higher highs. Now, should we be able to take out yesterday's low, which was the low of an outside day up? You see that right there at 28.2550. I'm getting my numbers mixed up. Then maybe there'd be an argument that you're going to get a retracement. Could it carry back to the 18-day average? Of course it could. It can go further than that. But we haven't had that too often, as you can see. So the question is, how far could it pull back? Are we in a resistance area? We are, but something's important. Notice that these Bollinger Bands, these black dashed lines, they're an algorithm designed to keep the market trading within them 95% of the time. When a market starts setting up a trading top, they start rounding in. Do you see that just like it did here? We haven't even begun that. That doesn't mean it can't happen because these respond after the fact to the action. One of the things I like to use are slow stochastics because often, not always, often, momentum leads price. Right now, this is still saying as long as these numbers, the K and the D line, the red and the blue that make up the number, and the whole difference between them in the formula is the red uses 3 days worth of data. Days because this is a daily chart. Got that? The blue uses 5 days. Same numbers, but takes the data from 3 days versus 5, and you get the crisscrossing of the red over the blue. But as long as both numbers are basically staying sideways over 80, the noise in the market is noise, and the momentum is still up. When you get these breaks, they often lead to price breaks in the market. That's the point that I'm making. Does it always work? Well, you had one here, and it didn't quite carry, but you can't argue. You did get the break in the market, but not very much, and that's because the overall pattern has just been so bullish. When we come to the NASDAQ, yesterday we had a reversal day down, and today the market closed basically unchanged. I will be watching tonight to see how the stochastic does. It's starting to turn down. If it gets under 80, it could be a sign that just the way it did this before here, maybe the market's ready for a bit of a correction. I'm not saying it is. I said maybe. Slow stochastics, fully embedded in the Dow. You know, it is easier to trade 30 stocks and see the weighting of that than it is some of these other indices. And the pattern is still one of higher highs, higher lows, and again, we have not begun the turning of the Bollinger Band. So until it happens, it happens. Do you have to be the first guy to catch a top in the market? No. Has it paid to try to catch a top in this market for years? No. So why look at it that way? Let it set up possible entry spots from the long side. You got to get your thinking where the market is. In the Russell, the market's now spent a number of days trying to get over 80 again and embed. You got it today, you had it yesterday, and the day before. So you had 4 days in a row, and this market's playing a bit of catch-up. Similar to the NASDAQ, very small close higher today. Could the red line turn down easily? It could. But again, because you haven't been able to get under that 18-day average for any period of time, I think one just continues to look at stock indices as the ability to enter the market on breaks, period, until you get a bigger change of a picture, which we haven't seen. In Davos, there was a common theme between what I call big-time money managers, Ray Dalio, Blankenfein, and they're saying that they still see money on breaks coming into the market. And they don't like the idea of being in much cash. That doesn't mean they're right or wrong. I'm just telling you what the big wigs, and they are big wigs, think about the market, and they're great investors. In the VIX, higher lows, higher highs, not getting back to that 18-day average. So the VIX is right in what we talked about. It's kept its uptrend. It's telling you there's a bit more volatility. It moved to the upper band of that. Hasn't really set a new high. Will this round out and do that? I don't know. But there's certainly a bit more volatility that you'd think, and that's good. You know, we're no longer in the Christmas period, so we can get to the point where as earnings even come to an end, the market starts looking at so many more events. In TLT, should this market take out 124.20, it might be ready to rally back to the 18-day average and figure out what it's going to do next. The overall pattern is still one of lower lows, lower highs, lower lows, but it has just stayed oversold. It never did embed, and that's a sign the market may be ready to bounce a bit. In the bond market, should this number, these are embedded readings, both numbers are under 20, both numbers under 20, both under 20. But should that be lost and prices get over 149.22, it is very possible this market's ready to pump up and get back towards that 18-day average as well. Until you lose the embedded reading, though, you haven't lost it. Do we understand that? 10-year note, the same thing, but trying to knock on the door to see what it's going to do. Should it take out 122.17.5 and get that number up there? Again, you might be just ready to get back up towards that 18-day average where it has been failing. on a regular basis almost since November. I have no reason to think you're suddenly going to get a bullish rush into the market. You might come to the end of a bear run for a little bit. The dollar index, embedded reading, bearish, lower highs, lower lows. All that we really did today is get back over the lower Bollinger Band. Okay, but you did reach a new low. Can you keep going down? You could, but this is a pretty big break that's occurred from right up here at the 94 level back in November. Just very sizable. In the eurocurrency, you got up to the upper Bollinger Band and you failed. Yes, you have the embedded reading, and as long as it stays in place, the follow-through, if there is any, might find itself still being well bought. You haven't lost a reason yet to say that this trend is over. British pound, you had a bunch of days where you were over the upper Bollinger Band, stayed under it. You can see that right there, got back over it, just back and forth each day, and that's what it's doing as it's pushing out new highs in this market. Is this market capable of 150? I guess it is, you know, if it keeps going. Is it also capable of wanting to pull back into this area for support? Well, if you lose the embedded reading, I would certainly think that's a possibility as well. Japanese yen. Is this the end of that run? Not necessarily. Notice how you've got your embedded reading. How many days do we have over 80? 1, 2, 3. So you got them. You got your 3 days now. Now, if you lose it, that calls for the possibility of a test of these two moving averages. If you keep it, the odds favor you won't get down there. So you got to take it. What's the trends, though? All of the currencies I've shown you so far are in uptrends versus a dollar index that is what? In a downtrend. Bitcoin got up to an embedded reading, lost it, and the currency fell right back to the 18-day average. Admittedly, this is a 15-minute chart. You see up here this little clock that they have? It means today's the last trading day for the January Bitcoin. All the volume and open interest, in theory, I've not seen, remember, it's a brand new contract, should move to the March tomorrow. The contract that has more volume than this, though, by a lot, is the CBOE contract. But they charge me to just put up their quotes for one, and it's expensive. I said, hey, give it to me free. I'll show it to the audience. And we aren't trading them yet, so why pay the dollars? In the down thrust here, in crude, look at that difference. So now you're just about $2 break. And as I said, you get much more than this, well, then you get a little more balance in the market, because what does it cost to ship crude out? And that's what I'll look up for you. The shipping cost from the U.S. to Asia is an example, and I'll have more information on that over the next few days. In the crude, the market is overbought. That's important. It's not embedding. It went to a trade top and failed against the Bollinger Band. Throw the name off the chart and just take a look at this. Would you be a buyer at a Bollinger Band? And I think you wouldn't. Do you have a trend? You got a lower low and a higher high. Do you have a trend when you look at the price? Absolutely. So often you see me talk to you and I say when Bollinger Bands narrow in, when they burst out of this is like a pipe with a spring in it. One way or the other, they're going to make a move. And this is your sign, obviously, that it's going to do that. The trick is, and it's not easy, does it pull back enough to let you into the market? In all fairness, it didn't. It just kept going once it broke out of that. Same thing happened in WTI. So not everything's perfect. You even had a pullback here, but once you got back over this number right here, you cleared your way, went up to that Bollinger Band. Now, are we embedding? So let's look at the numbers. Both numbers are over 80 today. Yesterday, both numbers over 80, and the day before. So you have your embedded reading. If you lose it on a further break, the odds would favor that you're going to see an attempt, doesn't mean it has to do it, of price in the 18-day average trying to come together. In the gasoline, we're starting to develop that sideways action at new higher levels, admittedly, in the gasoline than we were here. But we also have spring not too far away. Demand for gasoline is going to change in the marketplace and so on. The other part that's positive and negative is we know we've been getting draws on Cushing, Oklahoma gas, oil stocks and so on, and the products they're building is the problem there. Nat gas up into a lot of resistance. I pointed this out the past few days, the 100-day and the upper Bollinger Band. And as you can see, the markets have all closed behind me. So again, I write about all this. The simple way to get it is ask for my market research. You can either go to our website, www.iraepstein.com. You can call us. You can click up here underneath us at any point. You can just click that on and go to our website. A lot to talk about today. So sorry it's so long, but no choice. Have a good day.